Hello, and good afternoon. Welcome to today's webinar on Student Earned Income Exclusion and Plan for Achieving Self-Support, PASS, Improving the Financial Futures of Youth with Disabilities. My name is Al Mogliato. I'm the project coordinator with Empowered NYC, and I'm going to take you through a few housekeeping slides just to make sure everyone can get the webinar up and running and be able to hear everything correctly. Listening to the webinar. The audio for today's meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or headphones are plugged in. If you do not have sound capabilities on your computer or prefer to listen by phone, you can dial in to 1-929-205-6099. The meeting code is 521-684-756. Captioning. Real-time captioning is provided during this webinar. The captions can be found by clicking on the CC button in your Zoom controls at the bottom of the screen. If you do not see the captions after clicking the button, please alert the host, which is me, via the chat box. You may also view captions in your browser at the following website address: www.streamtext.net/player?event=NDI. Submitting questions. Please use the Q&A box to submit any questions you have during the webinar, and we will direct them accordingly. If your question is not answered during the webinar, or if you're listening by phone and not logged into the visual presentation, you may email me, and my email address is amilito@ndi-inc.org. Technical assistance. If you experience any technical difficulties during the webinar, please use the chat box again to send me a message, and you can also email me at my address, which, one more time, is amilito@ndi-inc.org. Please note, the webinar is being recorded and the materials will be placed on the National Disability Institute website at www.nationaldisabilityinstitute.org/resources/webinars. And with that, for an introduction, I will turn it over to Maria Yaramillo.
Good afternoon. Thank you, Al. Welcome to this webinar. We're happy that you joined us. And I want to start on the next slide by giving you some background on Empowered NYC before we begin. So Empowered NYC is an initiative that has created new strategies and tools to enable New Yorkers with disabilities to improve their financial stability. This initiative is improving financial capability in two ways. First, by offering tailored one-on-one financial counseling for people with disabilities, enhanced with new expertise, outreach, and tools. And secondly, by providing this monthly webinar training series for service providers like you. The strategic partners in this initiative include the City of New York, led by the Department of Consumer Affairs Office of Financial Empowerment, as well as by NYC's Mayor's Office for People with Disabilities. National Disability Institute is a partner in this initiative, as well as City Community Development, Post's Family Foundation, and we have an advisory board of municipal offices, disability service providers, and financial empowerment service providers as well. At the end of the slide deck, you will find additional information on each of these partners. As you heard on our webinar last month, financial counselors have begun serving people with disabilities. Counselors have shared with us how they are helping people with disabilities address some of their financial challenges, which have included, for example, documenting and negotiating why overpayment to SSA needed to be waived. And we recently learned that the counselor was able to get approval from SSA on this waiver. Another counselor shared that they were able to help a client increase their credit score, which is so crucial at times for renting an apartment or even for getting a job. Another counselor helped a client decide between opening a savings account or an ABLE account, evaluating the pros and cons and what would be better for their own financial goals. So we want to encourage you to refer your clients to the financial counselors, as they have been trained on benefits, on disability benefits, and they're able to address financial aspects of these benefits, including work incentives and income limits. The counseling sessions are free, confidential, and available in the 5 boroughs of New York City. On your screen, you will see the link you can use to refer your clients. And we believe that the sessions can really help your clients achieve financial stability. And by that, they can also help you as a service provider, help your client achieve the other goals that they have for themselves. As studies have shown, when a person has more financial stability, other aspects of their life begin to stabilize as well. Their health, as they have less stress, and they can dedicate more energy to achieve other goals in their life as well. On the next slide, we describe the objectives for today's webinar. So we're going to learn how qualifying students can use the Student Earned Income Exclusion to earn up to $7,500 per year without it affecting their Supplemental Security Income check. We're also going to talk about how someone receiving an SSI can use a plan to achieve self-support or a PASS to save for a vocational goal, including supplies to start a business, school expenses, equipment and tools, transportation, and other items necessary to help them achieve their goal. So today's speaker will be Nancy Boutot, who's a Financial Empowerment Manager at National Disability Institute. Nancy has been with you in many of the past webinars we've offered, and she's been providing technical assistance on benefits planning and work support for this project. So I'll pass it on now to Nancy.
Thank you very much, Maria. I appreciate that. Great to be with all of you today, and we'll just go ahead and get started. So disability and poverty, this isn't news to us, right? We've talked about this before, you know, but the slide to me is still somewhat shocking, and it's a reminder to me that people with disabilities live in poverty at a rate much higher than those who don't experience disability. As you can see, in New York City, 34% of working age individuals with disabilities live in poverty, compared to 14% of those individuals without disabilities. And for those of you in New York, which is everybody on the line mostly, this is nothing specific to New York. People with disabilities are more likely to be unemployed and to live in poverty than any other single demographic group in the United States. And we know that public benefits programs for people with disabilities, especially SSI, which is Supplemental Security Income, are not aimed at increasing assets or helping people to increase assets and independence. And then we also want people to know that just because there's a presence of disability and there's a need for people to maintain public benefits, that should not require anyone to forfeit their economic stability and live in poverty. In fact, there are a number of resources that exist to assist people with disabilities in leading lives with more opportunities towards financial empowerment. So why do we talk about economic self-sufficiency? Well, let's not forget that it's the law, okay? So Section 504 of the Rehabilitation Act was the foundation for the Americans with Disabilities Act, and we all know about that. We've talked about the ADA on some of our prior webinars. But it's interesting that in the ADA, it says the purpose of the act is to empower individuals with disabilities to maximize employment economic self-sufficiency, independence, and inclusion and integration into society. And I think that's really something that sometimes we forget. When a lot of us think of the ADA, we think about accessibility and making sure people can get into buildings. We think about protections from discrimination. But there's a lot more to it, including economic self-sufficiency, which is why we're so happy to be able to talk about this program. So before we get into it, let's talk a little bit about some of the challenges to financial capability. And some of these are specific to folks with disabilities, but a lot of them are for, pretty much anybody. But we want to talk about them because Empowered NYC, this project, is addressing these issues, which we think is really important. Negative credit reports or low credit scores. Individuals with disabilities can be vulnerable to identity theft and maybe have their credit used by someone else or stolen or such. Stress from financial insecurity. As Maria just said, we know that individuals who are financially stressed, it can also affect their health. Lack of a bank account. Many people with disabilities have no bank accounts, are underbanked, use payday lenders. And then something else that's a challenge is wage garnishment for either SSI, Supplemental Security Income, or Social Security Disability Insurance. So we've talked about the importance of making sure that people report wages, but sometimes mistakes happen, and then Social Security considers a person in overpayment status and wants to collect that money back. And then lastly, a lack of investment in financial education and education for careers. I can tell you personally that if it weren't for my mom, who worked in banking her whole life, I would not have gotten a financial education because we didn't get that in school. A couple things that I want to touch base on here. Hopefully you were all on last month's webinar. If so, we had some stories, and one was a great story about an overpayment situation like we just talked about. And the overpayment was waived by the Social Security Administration with the assistance of one of the Empowered NYC financial counselors. So very happy about that. And then we also heard another story last month about somebody who increased their credit score by 41 points, also with the assistance of an Empowered NYC financial counselor. So we're really helping people to address these challenges to financial capability. I know we have a lot of different folks on the call. I highly encourage you to spread the word about this project. If you're a provider, please assist folks in making an appointment. If you are a person with a disability who would like to work on their financial capability, please make an appointment. If you're a family member or have a family member of a person with a disability as well, please make an appointment. So part of what we're doing with Empowered NYC is creating some new expectations. So we assume that all people want to better their lives. And we want to make sure that we engage people with disabilities in the conversation. There's something that we say in the disability community that is nothing about me without me. Meaning don't make decisions, don't do anything unless the person with the disability is there, participating, active in their goal planning. We also want to provide simplified opportunities to improve financial stability. And that's what the ENYC financial counselors are doing. They have taken the Social Security Administration rules and regulations, which are very complicated, and they've been taught how to put those into more simplified terms so that people can understand them and move on to meeting their various goals. We also want to acknowledge the limited financial literacy of all Americans, including those with disabilities. As I just said before, I did not get financial literacy of any kind in high school. And then lastly, just as we assume competence with all people with disabilities, we assume the desire to live beyond poverty. We assume all people are competent, just sometimes need some guidance and support. And that's what Empowered NYC does. It gives people tools, resources, and supports so that they can live beyond poverty. So we talked about, at the top of the webinar, we talked about 2 work incentives, but I decided to throw a couple more quick ones in there, simply because they kind of relate to one another, and it just shows you how tapping into work incentives can really, really assist people in having more money in their pocket and leading better financial futures. So we're going to talk about 4 SSI, Supplemental Security Income work incentives. There are more. Between the SSI program and the SSDI program, I think there are about 22 various work incentives. That would take us about 2 days. So since we only have an hour, we're going to be talking about these 4, the Student Earned Income Exclusion, 1619B, which is also called Continued Medicaid Eligibility, Impairment-Related Work Expenses, and Plan for Achieving Self-Support. So we use lots of acronyms in this field, so let's go over a few just to make sure we're all on the same page. So first, SSA, that is the Social Security Administration. SSI, as I just mentioned, Supplemental Security Income, and then SSDI is Social Security Disability Insurance. And even though we're not going to be talking about that specifically today, I just want people to understand the importance of the 2, right? Because if you look at the acronyms, it's just a matter of 1 letter. But when you look at the programs, they are 2 completely different programs. They have completely different rules and regulations that need to be followed. So it's really important for people to know whether they're on SSI and SSDI or both. And sometimes they don't know that. So sometimes we have to start from the beginning with individuals. The other thing that I want to make sure people understand is something called the federal benefit rate. And for 2019, that number is $771 a month. So what that means is for individuals who are on SSI, the most that they can make in terms of getting a Social Security Administration check, an SSI check, is $771. And that's no matter where somebody lives. In New York State, you all also have a state supplement, and that could be $23, it could be $87, depending on the person's living situation. And it could also be a little bit more for married couples with disabilities. And then the last thing I want to mention is SGA, Substantial Gainful Activity. And for 2019, that number is $1,220 a month. And the reason that's important is you might be working with somebody who has a disability. And let's say it's a physical disability where maybe the person uses a wheelchair because they don't have use of their legs. That person, by the definition from the Social Security Administration, could be considered not disabled. Because when Social Security looks at disability, their definition is twofold. One is the actual disability, but then the other is the inability to engage in substantial gainful activity. So even if somebody has, according to, let's say, the ADA, a disability, if they are earning more than $1,220 a month, Social Security will say that they do not have a disability. And that can be confusing to people sometimes. So I just wanted to make sure we were all on the same page about that. Great, so we are going to talk first about Student Earned Income Exclusion. And Al, you can go on to the next slide. I have to tell you, I just read this morning earlier today that 41% of graduating high school students have an average of $3,000 in credit card debt. I was blown away by reading that. So one of the things I absolutely love about the Student Earned Income Exclusion is it really allows a student to keep some, if not all, of their SSI check, that $771 check. So let's go over some rules about it first. The person must be under the age of 22 and what we call regularly attending school. And that's really simple. It's not complicated. It just means that a person is enrolled in school and is regularly attending. That could be homeschool, that could be trade school, high school, college. So even if somebody is going to college part-time, that's considered regularly attending. And then what the Student Earned Income Exclusion does is excludes earned income up to a certain amount that changes annually, and we'll talk about that in a minute. And the amount earned looked at, there's an amount earned looked at monthly, and then there's also a yearly maximum. And I'll show you how both of those work. The great part about this Student Earned Income Exclusion is it applies before any other exclusion. It comes right off the top. And when I show you the calculation, you'll see that that pretty much means a person can get all of their earned income overlooked as long as they stay below the following limits. So for 2019, a student can earn, who is regularly attending school under the age of 22, can earn $1,870 a month. But there is an annual cap, and the cap is $7,550 per year. So before I show you the calculation, I just want to show you how easy it is to report a student earned income exclusion. All we need is two things. The student has to show proof that they're regularly attending school, okay? And that's really simple. It just means on letterhead that the person is attending school from the school's letterhead. And then the second is just showing the pay stubs that the student is earning. And that's all you need to do. That's all that the Social Security Administration needs to see when you request a student earned income exclusion. So what I'm going to do here first is show you a basic SSI calculation without the student earned income exclusion. So for anyone who is receiving SSI, Supplemental Security Income, this is the basic calculation that the Social Security Administration uses for everyone, okay? So I named throughout this presentation our fictitious person, Herman, okay? So in this case, Herman is receiving $771 in SSI. He begins working and he starts earning $525 a month. So now again, let's just figure out what his SSI check would be without the student earned income exclusion. So we have the $525 that he's earning. The Social Security Administration subtracts $65, what they call a general exclusion, and then they subtract $20, an earned income exclusion. So what we see here after subtracting those two is they're looking at $440 in countable income, and then they divide that 440 by 2. So his countable income is $220. So when you think about it, that's not so bad, right? He's earning $525, but the Social Security Administration is only counting $220. And then, of course, what they're going to do is subtract that $220 from that $771 SSI check, just as we've always heard, right? When somebody starts working, their SSI check will be reduced as they start earning more income. So if we look at the bottom here, we'll see that we have the $771 SSI check, and then Social Security subtracts the $220 countable income. So Herman's new SSI check after he starts working would be $551. And typically people stop right there and they say, see, I knew somebody was going to start earning less money when they went to work. And in a way, it's kind of true, the SSI check does go down, but let's look at Herman's overall financial situation. So his new SSI check is $551, but remember, he's earning $525. So his new financial outlook is pre-tax is $1,076 a month. So when you compare $1,076 to $771, you can see that even without using a work incentive, it really is best for somebody to go to work. And you know, hopefully you hear it in my voice. These really get me excited because I see the potential for students to never, ever, ever, as I said before, have to leave school and have $3,000 in debt or anything in debt. Okay, so let's now use the calculation with the Student Earned Income Exclusion. So it's the same guy, it's Herman getting $771 in his SSI check. And he starts working, earning the same amount, $525. So what will his new SSI check be? We take the $525, and then if you remember from the earlier slide, Herman can earn up to $1,870 a month. So since that $525 is less than that, the Social Security Administration overlooks it all as part of the Student Earned Income Exclusion. So Herman's countable income is nothing. He has no countable income. Therefore, that $771 check in SSI remains the same. So you can see at the bottom, he keeps his whole SSI check, plus he's earning his $525 from his job. So again, his financial outlook is $1,296 a month. I do see somebody put in a smiley face and exclamation marks. Thank you. Somebody gets my enthusiasm about this. I appreciate that. I don't know of any student who is earning this, right? And what that comes out to annually is roughly a little over $15,000 a year. So if you think about it, right, if a student does this for all 3, maybe even 4 years while he's working in high school, right, he could be upwards of $45,000, $60,000 when he leaves school. So I get very excited about that. All right, so I'm going to show you another situation. Not everyone in high school, disability or not, has the opportunity to work during the school year. Maybe transportation is an issue. Maybe there's extracurricular activities or things going on. So maybe somebody can only work in the summer. So I figured out another calculation for you to see so that you can see if somebody's earning more, but just a few months a year. So we've got Herman here again, right? Earning his $771 check in SSI. I shouldn't say earning, receiving it, right? He gets a summer job and he's earning $1,730 per month. Okay, so that's a lot more money. So in that situation, let's see what his new SSI check would be. Oh, it's still under the threshold. So he is allowed to keep that whole $1,730 before Social Security looks at anything. So even though he's earning way more than the $525 before, he keeps his whole SSI of $771, plus he's earning $1,730. So his financial outlook is roughly $2,500 a month. So if you think about that, if Herman can only work in the summer, and I didn't do this quite right because I know students don't get a full 3 months of summer vacation. Wouldn't that be nice? But you can see that that's $7,503 in 3 months. So again, if he were to do that every summer for 3 or 4 years, you can see how the money adds up. Now, the one thing I want to say here is we might have some people saying, yes, but people on SSI can't have more than $2,000 in assets and resources, or they may be in jeopardy of losing their eligibility for SSI. And I would say you're absolutely right. And this is why we have ABLE accounts. So as you all know, hopefully, New York has ABLE accounts, Achieving a Better Life Experience, which allows individuals who are on SSI and other public benefits to be able to save and not have their public benefits affected. Now, there are lots of rules that go into that, and there are caps in terms of the amount that somebody can have in their account. But the important thing is that a person can have much more than the $2,000 asset limit. And at the end of this webinar, I'm going to remind all of you of all of the different webinars that we have done since the beginning of this webinar series. Because back in, I want to say April, we did an entire hour on ABLE accounts. So if you want more information on that, you can go to the archives. We'll give you that link, and you can get more information on ABLE accounts. But the important thing here is that Herman can make a lot more money than probably many high school students even think that they can make, and still maintain his eligibility for SSI. All right, so I'm going to look at our Q&A. Oh, never mind. I see that they're being answered. That's great, so thanks, Elizabeth. All right, so the next thing that we're going to talk about is 1619B, which is also called continued Medicaid coverage. And the reason I wanted to talk about this is most people think, oh, once I start earning too much money, I'm not going to be able to keep my SSI, I'm not going to be able to keep my Medicaid. And this is where 1619B, continued Medicaid coverage, comes into place. So everybody's afraid of losing their medical benefits, okay? It could be that somebody doesn't need that $771 SSI check, but it could be that they still need their Medicaid for their medical coverage. And what 1619 does is protects those beneficiaries. And on the next slide, we'll show you how. So, how much can a beneficiary living in New York and receiving SSI earn annually in gross wages before they are in jeopardy of losing their Medicaid? So the answer to that is $46,316. And that's for the state of New York, and that is for the year 2019. So if it hasn't become obvious yet, we always say the year when we give a number, because Social Security Administration every year, well, not every year, but typically every year has a cost of living adjustment, and maybe these numbers go up by 2 or 3%. But the important thing here is that somebody can earn $46,000 and change, and they will keep their eligibility for Medicaid. Now, if somebody's earning that much money, they won't get that $771 SSI check anymore, because they'll be earning too much money, as you saw in that calculation earlier. But $46,000, $316, allows someone to earn a livable wage and, sorry, I lost track for a second, earn a livable wage and keep their Medicaid. And we also did, I'm promoting a lot of our prior webinars as well. So we did a whole webinar on Medicaid and Medicaid buy-in in New York. So that's an archive to watch if you haven't already, to learn more. Because as you can see underneath, Medicaid buy-in can increase this amount. So again, there are ways that a person needs to qualify, and we don't have time to go into it. But the important thing to know is that somebody can actually earn even more than that $46,000 and change, and still be able to remain on Medicaid. So the important thing for here, I think, for people to remember is we tell folks with disabilities a lot of times that they should only work part-time, or that they can't earn more than minimum wage, and that's just not true. People can earn livable wages and lead lives with more opportunities for financial empowerment. All right, and that takes us right into impairment-related work expenses, which again is something that we've talked about before, but I just want to remind people, because there are so many folks that qualify for an impairment-related work expense, and it's not a difficult thing to request from the Social Security Administration. So I just think it's a good option for folks, so I wanted to remind people about that. So what Social Security Administration does is they will deduct the cost of certain impairment-related items and or services that a person needs to work from their gross earnings. And they'll do that when they decide if a person is earning substantial gainful activity. Remember, we talked about that before. They're going to look at if somebody's earning substantial gainful activity when they decide if they qualify for disability benefits. So what they'll do is they'll look at out-of-pocket expenses that support a disability to allow a person to earn income, even if those services are needed for non-work activities. So let's look at what would qualify for an IRWI. So they must meet 3 criteria. First, the expense must not be reimbursed. So that means that somebody else can't be paying for it, Medicaid, voc rehab, it's got to be out of pocket. And second, the expense must be related to the disability. And then third, the item or service is needed in order to work. So some examples that we have here are transportation that the person pays for out of pocket that's due to their disability and that they need for work. Medications, that also includes copays. You know, and for some of the newer drugs, cancer drugs especially, copays can be really, really high. But if the person needs that medication and they're paying for it out of pocket, but they need it to go to work because of their disability, that can count as an IRWI. Also medical devices. So perhaps somebody needs to purchase a wheelchair and has to pay out of pocket, but the person needs that chair in order to be mobile to get to work. That can also count as a impairment-related work expense. And then a couple other things, personal assistance. Maybe somebody needs assistance in the morning getting ready for work, or maybe needs assistance while they're on the job and they have to pay for that out of pocket. And then also mental health counseling. So one of the things that I want to show here is mental health counseling, transportation, personal assistance. A person may need those for things other than work, and that's okay, as long as they also need them for work. Then they would count as an impairment-related work expense. So thank you for letting me kind of run by those two real quick. I just thought it was really important for us to have them in our presentation. And now we'll move on to our last topic, which is, oh, I'm sorry, I didn't realize we had the calculation within IRMI. So great, thanks, Al. So Herman, same situation again, right? He's getting that $771 SSI check. Same thing, he starts earning $525, okay? So what will his SSI check be within IRMI? So we take his $525, we subtract the $65 general exclusion, the $20 income exclusion, and that leaves him with $440. And then we subtract $200 as the IRWI. So what could the IRWI be here? Well, maybe he's paying $100 out of pocket to go to work, and it's due to his disability, but he needs it to get to work. And then maybe he pays $100 in copays for his medication that he needs, but he needs to be on that medication in order to work. So he has $200 worth of IRWI. So the Social Security Administration will then subtract that, and he is left with $240 in countable income, and then that is divided by 2. So really he only has $120 of countable income. Again, not bad, right? He's making $525 a month. So, and then we know how this works already, right? We take that 771, we subtract the $120 countable income, and Herman's new check for SSI is $651. So he's earning that plus his $525, and his financial outlook is $1,176 a month. And now we'll go on to the plan for achieving self-support. Thanks, Al. So I think many of us hear about PASS. We know it exists, but we don't know all that much about it. So what I'd like to do today is tell you just a little bit about it. And then again, because even though I don't love numbers, I'm a human service person, I really do like being able to show people how they can have more money in their pocket, so they can have money to save, so that they don't have to live in poverty just because they're receiving benefits. So how does a PASS help somebody either return to work or even start working for the first time? Well, a PASS lets a person on SSI set aside money and resources that he or she can show that she owns to pay for items or services needed to achieve a specific work goal. And let me just clarify here, the objective of the PASS is to help a person on SSI find employment that will eventually reduce or eliminate their SSI or SSDI. So that's one of the things that a person wants to show, is that by using the PASS and being able to save for a vocational goal in the future, that person won't need their SSI or SSDI anymore. And I did want to let everybody know that a PASS is actually for folks on SSI and SSDI, but in this situation on today's call, we're just talking about folks on SSI. So we can go on now. So how does the PASS work? So an applicant will find out what training, an applicant meaning a beneficiary on SSI, but they would need to apply for the PASS. So that's why we call them an applicant here. Would find out what training they need, what items or services they may need to reach a work goal. And a PASS can include things like purchasing supplies to start a business, maybe school expenses. That could be books, that could be tuition, that could be a computer, many things. Maybe equipment and tools if they're starting their own business. Also transportation for starting a business, and other items or services that a person may need to reach that goal. So the beneficiary finds out how much these items will cost, and then they submit that with lots of documentation to the Social Security Administration, and then if approved, the PATH can help the participant save to pay for those goals. So it lets people set aside money for purchases. It could be installment payments. It could be down payments for things like a vehicle, wheelchair, computer, those types of things that may be needed to reach their work goal. So here we go back to Herman again. So Herman has a part-time job, as we know. So let's say his part-time job has been in a restaurant cooking, okay? But he likes it so much that he wants to go to school and become a chef. So school will cost him $4,000 for the first year. Now, this is an example. We know that it's probably way, way, way more than that. But just to keep the example simple here, okay? So let's say Herman is now out of school and he has this job in the restaurant and he's making $885 in wages, okay? We take away the $65 exclusion and the $20 exclusion, and he is left with $800, and then, you know, Social Security divides that by 2. So Herman's countable income in this situation is $400, even though he's earning $885 a month. Now, we talked about Herman wanting to go to school to become a chef. So Herman says, well, hey, can I take that $400 and save it in a PATH plan? And the answer is yes, he can. So if we look at this calculation, okay, which I'm sorry you're seeing it 100 times, but I think it takes 300 times sometimes, for me at least, to make sure I do it accurately. Again, not the best with numbers. So we have the $885, we take away the 65, we take away the 20, we're left with the 800, we divide that 800 by 2, same as the slide before. Herman's countable income is $400, okay? And then Herman says, I'm gonna save that $400 every month in a PATH plan. Now, money that goes into a PATH plan is not counted by the Social Security Administration. So they subtract the money that's going into his PATH plan, and they look at it as Herman has no countable income. So what does that mean? That means he keeps his $771 SSI check, plus he's earning $885 a month. So in this situation, Herman's financial outlook is earning $1,656 a month. He's saving that $400 towards his vocational goal, and he is left with $1,256 a month to live on. I think those are some pretty good numbers. I hope you all are getting excited as I am today. All right, so before I turn it over to Maria and we kind of go back and forth a little bit, let's start talking about money with folks. I know when I grew up, it was, you know, don't ask questions about money. It's, you know, it's a bad thing. But I think we need to stop living in a society where, because people are on public benefits, it's just a given that they're going to be living in poverty. There are so many tools available for learning how to save, how to budget, how to build. We've talked about so many of them in our prior webinars. ABLE accounts, absolutely amazing. There are lots of work incentives, as I talked about before, roughly 22 between the SSI and the SSDI program. And in New York, a person on SSI can earn $46,316 before their Medicaid is in jeopardy. So pretty exciting stuff. And with that, I would like to turn it back over to Maria.
Thank you. So what are next steps or action items? We want to encourage you to join our Empower New York City listserv so that you can continue to receive resources or new trainings that we develop. We also want you to watch our archive webinars. If you missed one of the webinars Nancy just mentioned, she will later on give you the link where you can find all the archive webinars we've done. And of course, we want to encourage you to refer your clients to the counseling sessions. And for you to make a referral or for clients to schedule an appointment, they can use the link on your screen, which is nyc.gov/empowered-nyc. If you have questions or comments, you can also reach out to Crystal Rivera at the Office of Financial Empowerment. And her email is crivera@dca.nyc.gov. Next slide. And I think, Nancy, this goes back to you.
Yes, thanks, Maria. So I just, I'm sure not everyone out there, although if you have been on every one of our webinars, please put it in chat. We would love to thank you for participating in all of these webinars. But I just want to go over real quick the ones that we've done so far, and then I'll remind you how to access them. So why financial empowerment is important to people with disabilities, money and benefits, why financial empowerment is critical to work. We did an overview for a full hour of SSDI benefits and work. We also did a webinar on SSI benefits and work. As I mentioned before, we did a webinar on New York ABLE and financial empowerment using ABLE accounts. And then we did one on what you need to know about Medicaid for the disabled, aged, and blind. And that's Social Security terminology. But basically that one was about Medicaid buy-in for those of you who are interested. And then we did a webinar on the power of tracking expenses so that people can track those expenses for IRWs, impairment-related work expenses. And then we also did a webinar on how to prepare for tax time. We did one on building and improving credit history and the importance of good credit for people with disabilities seeking employment. But we also talked in there about people who are looking for getting a mortgage, renting apartments, other things that people look at credit history for. We talked about integrating financial capability strategies into your disability programs. We did housing as a key stepping stone to financial stability for people with disabilities. A couple months ago, we did work incentives in action, where we had a couple providers talk specifically about how they worked with the Social Security Administration to get work incentives approved. And then last month, we did Tales from the Field, stories from one-on-one counseling sessions. So all of those webinars can be accessed. We have them on our website archived. If you go to www.nationaldisabilityinstitute.org/resources/empowered-nyc-webinars. And as we move to the next slide, I want to thank you all, because I don't know if I mentioned it in the very beginning, but this was actually our final webinar in this series. But that doesn't mean you're done with us yet. We are starting a new micro training series. So they are going to be 3-minute videos that we are going to use to educate New Yorkers with disabilities about topics such as the myths about SSI and SSDI, tips to know before starting a new job, reporting wages 101, reasonable accommodations, and tips for college students with disabilities. And those are just a smattering kind of what we're going to be offering. And if any of you have any suggestions, I know there'll be a slide with all of our contact information in a moment or two. please contact any of us if you have any ideas about future topics for that new micro training series. And with that, Maria, I will turn it back over to you. Thank you.
Thank you. We received a couple of questions. So let's start with one that is, the question says, does SEIE work for students who are enrolled in apprenticeship programs, meaning they are paid for educational activity?
Yes, yeah, that's a great question. So yeah, and the answer is yes. A qualified student can apply for the Student Earned Income Exclusion when they are enrolled in an apprenticeship program. Absolutely.
Great. Okay, another question we have is, how often do you have to show the SSA that info for the Student Earned Income Exclusion, and how can we explain the 65 and 20 exclusions to the families?
Okay, so the 65 and the 20 are kind of hard to explain to families because people ask me, you know, well, why did they subtract that amount? I don't know. Why is the sky blue? It's really kind of a hard question to answer. One is a general exclusion, one is an earned income exclusion, and Social Security has been using the same exact formula since like 1973 or 1974. So it shouldn't be anything that worries families, but it is really hard to explain because I can't quite explain what Social Security Administration's rationale is with that. And I'm sorry, Maria, what was the first part of that question?
How often do you need to show to SSA the information for the Student Earned Income Exclusion? Great
question. So when the Student Earned Income Exclusion first gets approved, meaning a student goes to the Social Security Administration with the letter that says that they're a student, with their pay stub that says this is what I'm earning, then each month after that, the student will need to report their wages. They should not have to keep submitting a letter.
Mm-hmm.
However, if they notice that Social Security is not implementing the Student Earned Income Exclusion, then they should do a repeat and go to the Social Security Administration again with the letter.
Mm-hmm.
So basically they should only have to do it once.
Okay.
But Social Security does make mistakes.
Okay.
And it's up to us, it's up to beneficiaries to keep on top of them.
Great. Okay, one more. If someone is on SSI, wants to go back to work, receives a pension from a job they had, how would that pension affect their SSI or SSDI, and would it affect how much they can put aside for a pass?
Yeah, so kind of too hard to get into because one, it depends, it would be completely different if they're on SSI or SSDI.
Mm-hmm.
But one of the things that the Social Security Administration does is before they decide what somebody gets, they usually look at what they call unearned income, and pension would be considered unearned income. So that pension would be put into the calculation before it would be decided if the person was eligible for either SSI or SSDI.
Great. Is the earned income taxable?
Yes, earned income is taxable. So I wasn't, when I did the calculations earlier, we don't show taxes because we can't quite tell, but just like all of us, we have to pay taxes on our earnings. Not on our SSI, but on our earnings.
Okay. Great. If a student graduates from high school and works for the summer, then attends college in the fall, do they qualify for SEIE?
As long as they are still under the age of 22, yes. When the student turns 22, they become ineligible.
Great. Okay, and what happens if a student earns more than 1,870 per month or 7,550 per year?
Great question. So basically what the Social Security Administration does is carries over. Okay, so let's say a student earns $2,000 in a month, right? That's $130 over the $1,870 monthly limit.
Mm-hmm.
So Social Security would look at that $130 and that would be counted as income. And then the standard SSI calculation would be used.
Mm-hmm. Okay, so we are at the top of the hour. We want to thank you all very much for participating in this webinar. You have our emails in the slide deck. Send us an email if you have additional questions that we were not able to get in this 1 hour webinar. And please, we encourage you to watch our archive webinars and refer your clients to this amazing free one-on-one resource. Thank you so much.